And welcome. This is Mary Ellen McGonagle, and you're watching the MEM Edge Show, brought to you each and every Friday at 5 p.m. Eastern Time. And our goal here is to put you in front of where the action is in the broader markets. We're going to take a really good overview of just what happened this past week, very interesting week, and all with an eye toward helping set you up for prosperity into next week. So let's go ahead and get started. We have a fair amount to cover over the next 30 minutes. As usual, we're going to start out by taking a look at the current markets. Now, they did end mostly flat for the week, but I'm sure you'll see, and perhaps you noticed this week, that we did get a pretty sharp pullback in the beginning and a very healthy recovery from that. And so we'll take a really close look at that. Also, there are some newer groups showing strength this week, as in addition to groups that had been showing strength. And the reason I'm pointing this out, and I will review these with you, is because as an investor, you're much better served to play that strength, to be involved, and at the very least be aware. Where are the money flows? Where are institutions putting their money to work? And again, with an eye toward you taking advantage of where that outperformance is. And then also, best way to spot candidates during a pullback. We did see pretty sharp pullback in two recently leading areas, and you'll want to even though we did end the week flat, there's still some ways that you can take advantage of the pullback that occurred last week. So I'm going to review that with you, sharing with you names that did pull back with their groups, but appear next week to perhaps outperform. And also, more big earnings are still due next week. And the reason that I do cover this on a weekly basis when relevant is because oftentimes when these stocks that are bigger, larger cap, better known, when they report earnings that are either on the plus side, they're ahead of estimates, or below, you can often see a spillover effect where other names in that given group will respond in accordance. And there is a name this week that also reported in the same group as a stock this week. And so I'll share with you that relevance and you can get a feel for that. So let's go ahead and get started. We're going to take a look, as I mentioned, at the S&P 500. Of course, we are using StockCharts.com, and this is a view, a daily price chart of the S&P 500. And we can see that it rallied quite nicely today, but bigger picture, let's take a look at how the week prevailed. We can see that last week on Friday, we did get a bit of a pullback that extended into the beginning of this week. A lot of this was trade war related. But more importantly, let's take a look at the indexes relative to these simple moving averages. This is going to be, for my work, the initial go-to to assess the health or weakness of the markets. Are we getting yellow or red flags? Where do we stand? So ideally, as it relates to these simple moving averages, I like to see each of these indexes, and most importantly, the S&P 500, finding support at this upward trending 10-day simple moving average. That's the green line here that you can see. And from there, whether it is continuing to find support, we did get a break below that 10-day simple moving average. I'm going to add an additional simple moving average that is really quite helpful during periods where the index does break below that initial 10-day. You want to have a secondary area of possible support without getting too busy. But this pink line that I've just added is your 21-day simple moving average, your next secondary. Normally, we do have a little bit more of a spread, but given the strength in the markets since the beginning of October, they're a little closer together, which is fine. More importantly, what I want to point out to you here is we did get a break below both that 10 and that 21-day simple moving average. Certainly concerning going into the close on Tuesday. However, take a look. We can see that on Tuesday, the broader markets closed in the upper portion of their trading range for that day, and we did get it on volume that was greater than the prior day. The relevance here is that buyers came in on the dip, and that generally is quite bullish. We can see that the markets from there has stair-stepped up back above these shorter term simple moving averages back into positive territory. Good news is on this RSI, that's a relative strength indicator. You want to pay attention to the position relative to this dashed or net neutral. And so we can see that the RSI throughout that pullback period, it did stay positive. So that's good news. And then more importantly, it's heading back up. Let's move down to another momentum indicator that I like to use below the chart. It's called the MACD, or moving average convergence divergence. And you want to pay attention here to 0 is the neutral. So ideally you want that MACD to be above 0. We do have that still in place. So we're getting a nice downtrend, or actually not even a downtrend. I would call this a slight pullback reversal, which is quite healthy. Now, I did mention to you within that period, during this period, some groups pulled back more than others. And we're going to take a look at that pullback. Not all of them recovered. Let's take a look at some that did and how you can potentially play the pullback. Before we get into that, we're going to drill down a little bit more into these markets. And of course, I like to take a look at the sectors, the 11 sectors in the S&P 500. This is what's called a candle glance view. You can access this from the front page of StockCharts.com. It's giving you a 2-month daily price chart, and you can really populate it as you wish with either different stocks, different indices. For our work today, I did go ahead and put in the 11 sectors with the S&P 500, overlaid this RSI, or relative strength indicator, and then I want to sort it by descending, with the strength showing up here in this upper left quartile down to your weaker areas on the lower right. And what you'll find is, if you follow us each week, or perhaps even do this on your own, you will find that this evolution, or perhaps rotation, is not going to be whippy. It's going to be something that you can really count on as far as really guiding you and helping you out. Now, that said, we are seeing continued strength in healthcare. This is something that we've been pointing out. This is our 4th week now that we have pointed this out to you. Let's go ahead and take a bigger view at healthcare, because you will find it very relevant. This is a daily price chart. I'm going to quickly pull up a weekly view. And we've been, as I said, highlighting this for some time now. Super nice uptrend here. Going back to a month plus, healthcare was the weakest on a year-to-date performance, and not just by a little. It was perhaps even down at one point on a year-to-date basis relative to really super strong groups. Technology was up over 40% at one point, and so forth. But great to see a move into healthcare. Again, this is an area that we have been touting as one that you can search for underlying strength within that. And certainly with the MEM investment research, my MEM Edge newsletter has been all over this, with not only pointing out the strength here, but there's one area in particular that is showing the most in the way of relative strength. And hopefully we'll have time to get into that. If not, take a look at my MEM Edge report. You can trial it at a nominal fee, and I would recommend that. So one other area that is picking up, and it did pick up this week, is financials. Take a look. Financials on this daily view, this 2-month, and again, let's take a look at a bigger view. Big gap up today, and we're going to share with you where that strength evolved from, as well as individual stocks that can benefit. Because when you're looking at sectors, looking at a longer term view can really be quite powerful. Financials in particular breaking out of a 2-year base formation to new highs. And for those of you, that's a saucer type base if you're not familiar with that phenom. But I also want to share with you the longer term, this basing or in essence consolidation period, whether it's for an industry group, a stock, the longer term that that breakout is emerging from, the longer term period of consolidation, the longer that advance out of that base. This is historical precedent. For those of you not familiar with my work, I did work for many years with William O'Neill and Company in their institutional marketing department, where I worked with top fund managers. So a lot of the principles that I'm sharing with you each and every week evolved from that, where we're using factual historical precedent. So nice move in the financials. We're going to get into that. Let's take a quick peek at some of the weaker areas so we can see consumer discretionary. This is something we've been covering because they've been lackluster for some period of time. And this is interesting to me because last weekend we did have Black Friday, Cyber Monday, record breaking numbers, certainly on the online sales side, but we're not seeing it reflected in consumer discretionary. Now, I will argue that because there are select retailers that are standing up quite well, poised to outperform. It's a small number, but they're there. Last week, Barron's did a report. They highlighted those stocks if you want to look that up. But I will say actually four of the five stocks highlighted as benefiting from Cyber Monday and Black Friday were on the MEM edge list. So I'm just giving you all the more reason to go over and take a look at it, take a very low price trial. But weakness there. I talked to you about a pullback that is potentially reversing, and that's in industrials. We're going to take a closer look there because industrial stocks were down 2.3% going into Wednesday's close, but we are getting a nice bounce since then. They've recovered more than half of that deterioration. We're going to look at where the strength and where the area is that reversed the most. So again, you can benefit from that. Let's take a moment before we move on to drill down even further beyond these sectors. We're going to take a look here at some other very highly relevant industry groupings outside of those sector ETFs. And what I've done here is populated each of the broader market indices, the NASDAQ, Russell 2000. We have oil prices in here, as well as biotech, semiconductor, and software stocks. IGV is what I'm using for the software stocks as the ETF, SOXX for the semiconductors, for your knowledge, of course. I went ahead and added that RSI again and also sorted it by descending. So here we are going to really drill down beyond those broader sectors and get a feel for where the strength lies further. So we can see biotech stocks continuing to sit up. This is something we've been pointing out, sitting up very strongly up here in the forefront. Really nice to see this move into small cap stocks. Now, they ended the week down a little more than 0.5%, but by and large, a move into small caps is positive. And I do have some preset screens. If we have time, I'm going to go into how you can uncover and capitalize on the strength in these small cap stocks. Semiconductors, US oil prices up big this week. But there are some areas that I want to point out to you that are languishing a bit. And this is where we're going to take a look at the pullback and how you can benefit. This is semiconductors using that SOX. I'm going to take a minute here and blow this up so you can see the action that we saw in semiconductors. This is Monday and Tuesday of this week. And these semiconductor chip stocks are really relevant. They've been super outperformers for most of this year. And this action here was supposedly trade war fear related, but take a look, found support at this upward trending red, simple moving average, bounced back above that 10-day, your RSI turned positive again. So this is an area that we're going to drill down and look at some of the leadership names that pulled back that are still below their prior highs that you will want to take a look at. Let's see if we have any other areas that are of interest. Yes, volatility spiked up to 18 on that Tuesday sharp decline. Take a look, it's back down below that relevant 16 to 18 level. So volatility has subsided. This is very good news. And we can also take a look at the 10-year yield, and today's 2.5% uptick has a lot to do with that move into financials. So these are the kind of groupings that can really help formulate your thoughts, not only for the broader markets, but for individual industry groups. Again, all with an eye toward helping you formulate an even more refined plan. So we're going to take about 30-second break here. When we come back, we are going to carry on with our drill down into playing the pullback in this week's market. We'll be right back. And welcome back. I know I threw quite a bit of information at you in that first half, so I'm going to slow things down just a little, and we can get a little more refined as to the information that I just shared with you. And then also, the way that I share it with you is with an eye toward helping you so that you can do this throughout the week, these types of practices that can help you uncover potential candidates. So I talked to you about the pullback that we saw. We can begin with those semiconductor areas, and I'm going to show you how you can really get into that and drill down and uncover potential stocks. So in this first page on StockCharts.com, we have that sector summary on these summary pages. I'm just going to go ahead and access that. And this is something that you can do certainly on a regular basis as far as viewing where the market strength is on a daily basis. I'm going to go ahead and look at the 1 week view. And semiconductor stocks, they are a part of technology. And in the beginning period of this week, the tech sector was down quite a bit more, at least more than double what it is down. So that's that pullback that I mentioned to you that we saw in two of the major component groups in tech. That would be semiconductor and software. So let's go ahead and click on that sector name so that we can get a 1 week view of the sub-industry groupings within technology. So here we have a nice view. We can see semiconductors ended the week down, but from that view that I shared with you earlier, they did have a very sharp reversal from that pullback. So let's take a look at how and again, this is from my work as far as using historical precedent, if this, then that. So what I'm going to share with you right now is we can see immediately that a number of the semiconductor grouping overall was down a 0.5 percentage point, but we can see that there are a number of stocks within this grouping that did have big, more significant moves, but a lot of them are these smaller mid-cap stocks. Now, that's not saying that it's not a good thing, but from my work, I do tend to prefer larger cap stocks. They're going to have more liquidity. They are going to have more in the way of institutional viewership, and certainly move in a less volatile fashion than some of these smaller names. So let's take a look at some of these stocks. What I did right here is just going back. I sorted it by market cap. So we are going to take a look at some of these larger cap stocks. And in fact, there were some larger names that did have some nice moves. So what you can do from here is go ahead and hover over that ticker symbol and take a peek at the relative performance of those stocks. And quite simply, I do prefer to see this initial column up here is what is called the StockCharts technical rating, SCTR, and the higher that number, the better. It's telling you that the stock is technically sound. It's been relatively outperforming if that number is higher, and it is indeed most likely poised to outperform. So let's take this a step further. Now that from my work I've sorted it by market cap, you of course can skip that and just sort it by this scooter if you are inclined. And then from here we can simply click onto that ticker symbol and view a daily price chart. I'm going to blow this up. This first name that we are looking at is SWKS. We are in that semiconductor industry group. And what I wanted to point out to you with this particular stock, and you'll find this in some of the other larger, higher scooter rating stocks, where they have pulled back. SWKS did in fact pull back, but take a look. It really was well above that 50-day simple moving average. We did not get as severe a pullback. What that is telling me is that SWKS is in fact a relative outperformer, and from my work, a potential leadership stock, because it has been able to withstand pressures that were in fact seen in many other semiconductor stocks. So that is one factor. The other is the fact that this RSI that I have up here on this daily price chart really stayed above that 50. It did not pull back below that. Another sign of relative outperformance, indicating strength. Now, we did get the moving average, the MACD, convergence, divergence. We did have that black line below the red, which can be a negative signal, but really it's just telling you that this really healthy uptrend has modified, because we're still above that zero. We are in good standing. Now, the other thing that is occurring with this particular stock is the fact that it is breaking out, or poised to break out of this nice 2-week base. So a lot of good action going here. So that is one way that you can identify potential candidates, because as you saw from the semiconductor indexing group that I showed you, the group chart, SOXX, the group itself has turned positive. So you have a green light. Now, the reason I'm focusing on semiconductors is because, quite simply, these stocks, when they move quite quickly. And not only quickly, you can really have high relative outperformance. I'm going to share with you a couple of other names that cropped up within semis, because we are running a little bit out of time, and I have a lot of other areas that I want to go over with you. This is MPWR, monolithic. We are looking at a daily price chart. Now, this stock did move more in line with the semiconductor index, where it pulled back to that 50-day, but take a look, hit a new high today. We got pretty decent volume, but this is another stock poised to break out of a base. And we can see up here, when you ask for the full quote on StockCharts.com, quite simply, you just check it off down here. It's going to give you a lot more information. We can see the scooter on this stock. It's a mid-cap name, is 89. That's almost 90. So really, going back to that listing, for those of you that are not as inclined to your preference is not always going to be market cap driven, you can quite simply just sort it by this SCTR. And again, these are by and large going to be your leadership names, and you can really use this area to uncover potential candidates that are poised to take advantage of that pullback and now continued move into semiconductors. Now, I'm pulling up this stock. This is KLA Corp, KLAC. It did have a relatively high scooter, but the reason I'm pointing this one out is because this particular stock, even though it's in that grouping, is not ready for prime time. We can see this gap down here. I will tell you, it was earnings related. Generally, by and large, when you're in a group that has a lot of strong stocks, you're not going to want to be involved in a name that dropped gap down on negative earnings numbers. But we can see the stock is trying to reverse. take a look. RSI is not positive. It's not above that net 050. The stock, most importantly to me, is not up above this red 50-day simple moving average. I would need to see it break back up. And then also your MACD. It's down here below that net neutral, and it has not turned positive. So let's leave it at that with the semis, because I do want to get into the financials. I talked to you about strength this week, that long breakout. So we are going to want to take a minute here to review the financial sector, up 0.7% for the week. Again, this is a weekly view, and we can see which areas outperformed. It was not every financial grouping. So looking at the weekly performance, as far as identifying where you may want to drill in, we can see that specialty finance, and I'll tell you, this is a group, it's kind of a basket where they don't know where to put it. It goes into this area. I'm not going to take a look there. Instead, I want to look at bank stocks. Bank stocks are a very large component, certainly of the small cap index, also of the S&P 500. This is going to be of much more interest to me. So we can see that immediately up here in the forefront, a lot of these super big movers, again, are those small and mid cap stocks. Not a bad thing, but for my work, I'm going to sort it by large cap, drill down. It's going to take us a while because a lot of these other stocks are preferred trust and not really listed properly, and take a look. So Regions Financial, JP Morgan were two of the biggest movers this week. Again, the MEM Edge report. These are out of the three bank stocks that I have. These are, this is two of them, and they are setting up really quite nicely. We can take a look by hovering over this sharp chart view. We can see that RF pulled back in line with the financials, had a big, nice 2% gap up today, poised to break out of this base. So there are a number of candidates, and that is one way that you can sort it. Again, you can sort it simply by this SCTR and go ahead and hover over this ticker symbol to find potential candidates. So that is up the play into financials. One area that I did want to get to before we run out of time here is those stocks that are due to report next week. Just a couple of names here. AVGO, this is a large bellwether semiconductor stock. And I know a lot of eyes will be on Broadcom to see if they report, because semiconductors overall have been a little wobbly here since peaking in the beginning of November. So Broadcom, you're going to want to keep an eye on that on Thursday. LULU, huge outperformer in the consumer discretionary. This is one of those outperformers that I mentioned to you, also took advantage of Cyber Monday, Black Friday. They're due to report on Wednesday. You're going to want to keep an eye on that to see how they perform. And then one last name I wanted to share with you, and it's a rather volatile looking chart, but this is Toll Brothers, and home builders by and large have been outperforming. Not so with this stock. I did write a "Don't Ignore This Chart Today" article that on StockCharts that you're going to want to take a look at. I highlighted one of the bigger performers and the leadership names in these home builders, but this is a stock that reported this week, Hovnanian. Yesterday they reported big numbers, gap up, and it's a continuing this downtrend reversal. So we're going to want to take a look at Toll Brothers and see if that's able to outperform. Still have more time left here, so that's wonderful, because there was one other area that I wanted to share with you, and that's the fact that these FAANG stocks, there are three names that are holding in and two that are not. With Facebook just being okay, we can just see it's trending sideways. Amazon, not so attractive, but we do have two leadership names among the FAANG, and you want to see that because those are big components of the broader markets. Apple gapped up today to a new high, very healthy. Google had Alphabet had news this week, gapped up to a new high. So those are your two leadership names within the FAANGs. I'm going to leave it at that. Happy weekend, and I will see you next week. Please take a moment to use the link below to trial the MEM Edge report. Thank you.